bond market, on the other hand, yields just continue to go up. So the bond market continues to weaken. So the bond market's losses are gold's gain. The bond market's losses are silver's gain. The bond market's losses are Bitcoin's gain. It's not the dollar, folks. It's the bond market. The world is swapping bonds for something that's more stable, more secure, more real, for collateral.
Precious metals rallied even after a stronger U.S. jobs report on Friday triggered another hawkish repricing in the bond market. Once again, gold and silver traders ignored the rise in Treasury yields as investors trimmed bets on a rate cut in June, and the chances of 3 Fed reductions this year fell. Gold rallied around $40 to hit a new record high, and silver extended its weekly advance to around 10% ahead of the publication of US CPI in the week ahead. CEO of Gold Plus Coin, Vince Lanci, analyzes market fluctuations, stressing the inverse relationship between declining bond markets and gains in precious metals. According to him, investors are swapping bonds for more stable and secure assets. Gold's unstoppable bullish momentum has spilled over into April, sending prices to a new all-time high of $2,305 an ounce, extending its gains by an impressive 28% within the short space of 6 months. In his assessment, Vince mentions the notable downturns in gold and silver values, followed by rebounds, particularly in silver. He links these shifts to actions by long investors and raises concerns about possible market manipulation. Meanwhile, silver prices have climbed above the key psychological level of $27 an ounce for the first time in 2024. While adding depth to the discussion, Vince further indicates a shift in monetary policy influence from the Federal Reserve to China, noting China's adoption of Western-style fiscal stimulus measures. He predicts this shift will affect global monetary policy effectiveness, impacting asset pricing and market dynamics. Now, we present the clips of Vince Lanci's insights from his recent video with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The market's open and gold and silver dove precipitously. Now, $20 gold was down, and that wasn't crazy considering what happened last Friday. There could have been some longs that wanted to sell. Of course, there could have been some spoofing as well. We know that. But those usually work during thin hours. However, we're not in thin hours anymore. It was met with buying. This is the open. This is a 15-minute chart. And this is the ramp above the highs. New highs up to 2354, at least on this machine. Silver was even more pronounced. Silver also sold off. Opens 2747, goes as low as what? 2684, sorry. Right? Now bounces up to as high to over $28 and now settles in at 2764. The dollar during that time frame, okay, starts out weak, gets strong, gets weak, volatile, but in a tight range, nothing crazy. That looks scary, but it's not, right? The bond market, on the other hand, yields just continue to go up. So the bond market continues to weaken. So the bond market's losses are gold's gain. The bond market's losses are silver's gain. The bond market's losses are Bitcoin's gain. It's not the dollar, folks. It's the bond market. The world is swapping bonds for something that's more stable, more secure, more real, for collateral. Okay, so why did the market, you're going to read a lot of reasons why the market sold off and rallied, and it'll be, I can't even say the nonsense anymore, but it'll be because of the Fed might be easing now, the Fed's not easing, the market is concerned about that, and policy changes. You'll start to hear things like China's manipulating currencies or gold price. This is fallout from the Yellen conversation. Part of it could be. The Fed, here, let me bring it up so you can see the words. The Fed is dead, okay? It doesn't mean monetary policy is dead. It just means the power, the monetary policy power is moving. It's relocating to the east, to China, okay? The gold went over. It's still going over. People are talking about it now, but it's been doing that for years. The pricing power for gold is moving over. And that means the monetary policy that's effective will move over. So why am I bringing that up? Because China is taking a page from our playbook. The Chinese economy is stressing out, right? Maybe not so much today, but the Chinese economy has been, the ghost cities and what have you. They've been doing various things to combat that with muted success. Now, what they're doing now is right now, as discussed on this site last week and in a couple other sharp places, is China has been issuing debt. So fiscal stimulus, borrowing money to keep their economy going, borrowing money, but not really spending a lot of money. Now, that's been weakening their bond yields, right? Now, their bond market's not that important yet.
While highlighting a disparity in monetary approaches, Vince Lanci points out how the U.S. directed QE funds primarily toward stocks, while China pursued a dual investment strategy, notably investing in gold alongside stocks. He emphasizes China's strategic shift towards a gold-backed economy, reducing reliance on the U.S. dollar, while noting China's effort to internationalize the yuan. China's central bank purchased gold for its reserves for a 17th straight month in March, extending a buying spree that has helped the precious metal surge to a record. China has actively pursued de-dollarization by partnering with non-Western groups like the Shanghai Cooperation Organization, SCO, and BRICS. They advocate for using local currencies in international trade and investment, expanding participation in alternative financial systems. The BRICS Economic Alliance has continued to grow its economic cooperation this year, as its trade with China has reached a record $14 billion in local currencies. Specifically, reports note that Jiangsu province saw intra-alliance trade reach 102 billion yuan in the first 2 months of 2024. Drawing an analogy to Game of Thrones, Vince portrays China as a rising power in global finance. Let's get back to the interview.
The difference between China and the US is when we did QE starting in 2009, our government steered the money into stocks, steered the money into government, into corporate bonds. It steered the money away from precious metals. Now, there's ways that they can do that. That's market structure. That's the invisible hand that they control. China, however, they're steering the money into stocks, no doubt, right? They're also steering the money into gold and silver, especially gold. Now, why? Because they don't care about the dollar. They don't care about the yuan weakening against the dollar because they're not a dollar-based economy anymore. They're a gold-based economy. So if the yuan weakens against the dollar because they're printing, so what? They're taking the yuan and they're buying gold with it. If the yuan weakens against the economy, yuan weakens against the US dollar, they're not doing trade with the US anymore. They're doing trade with gold. So they don't need as many dollars to do stuff anymore. They have gold. Their currency is backed by gold now. Not literally. They're not going to come out and say that yet, but it's going to happen. They'll come out. It's a soft backing. They're doing that in preparation for everything. China has a plan, and the plan is to internationalize the yuan, to make the other BRICS states trust them. Oh, your currency's trading out there in the open now, but what backs it? We don't want to have that bullshit backing like the US did. Well, we've got a lot of gold to back it. Oh, I guess we can trust you. But what about your bonds? Well, China's like, we're working on that. The bonds are next. But let's get the currency internationalized. And once that happens, you can call the dollar whatever you want. Global reserve currency. Who cares? That's another economy. And our reaction is going to be, sadly, to defend our way of life, which is what you would expect. But our way of life has nothing to do with finances yet, but we're treating it as its finances. And so the Fed is dead. The PBOC is the new Fed. So your God no longer cutting it. The new God is, it's like a Game of Thrones. It's really like a Game of Thrones thing. I guess the Targaryens are the Chinese and the Seven Nations are the G7. Wow. Okay. There you go. All right. So moving on from my little analogy there. These are the other 4 posts that I'm going to draw your attention to. They're in premium. They're also attached. You don't have to read all 4 of them, but if you're looking for answers, they're there in different forms. The first one, this is about the Chinese stimulus. Forget the title. This is about the Chinese stimulus. The second one, there are clearly buyers of gold at current levels. That's very important if you want to get a bullion bank's perspective on it. You can see the bullion banks are talking about gold when they're permitted to in a very, very favorable light.
In early April 2024, gold made even higher highs, and the market consensus favored Fed interest rate cuts before the end of 2024. Moreover, a highly contentious November election is on the horizon, which could translate into market volatility across all asset classes. The evolving role of China in reshaping the global financial order prompts a reevaluation of traditional economic paradigms, particularly in the context of gold and silver. How do you foresee China's increasing focus on gold and silver affecting global precious metals markets and pricing dynamics? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.